Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
Hi, everyone. We are back. Welcome to episode 109 of Carson's Facts versus Feelings. Ryan and Sonu here. Sonu, I don't know. You want to talk about midterm elections?
I know. It's maybe even the next presidential election.
Oh,
because
my goodness.
We now have a lame duck president, right?
Oh, yeah. So welcome back, everybody. The election is... I guess the election's over, right? We know we have a new president. We're going to talk about we have a new president coming, I should say. We have lots of stuff to talk about this week. Sonu, we titled this one, The Post-Election Chase is On. Because obviously,
there we go.
We've been bullish. You and I talked before about why we thought there could be a post-election rally. And my, oh my, has that happened. But before we get into any of that stuff, I don't know. I'm glad it's over, I guess. At the same time, it's like, what are we going to talk about anymore? I mean, how you feeling in there? How you feeling?
Good. Yeah. Look, we've been bullish coming into this, and irrespective of who won, I should say, right? Like we were like, there's going to be a rally post-election, simply because we talked about hedges coming up, all sorts of the structural reasons, and this is a good time for markets too. November, December, January, seasonally strong from everything you've done in your work, and this is always likely, but now we have a president who, and it is really like Trump 2.0, right? We saw the 1.0. What does he care about? He cares about the stock market. He doesn't want the stock market to go down. And, tax policy is in the works, and tax policy, when it's a Republican sweep, we'll talk about all that, is likely means taxes will go down, deficits will go higher. We've continuously written about the fact that markets like deficits. So it's like, don't fight the Fed, don't fight Congress, right? I mean, the Fed's dropping interest rates. We're likely to get tax cuts next year, right? The deficits are likely to go up. And I think that more than outweighs any of the risks and threats and tariffs and all of that stuff that we see out there.
Well, Sonu, I think we're done. I don't know if we really, maybe this is the quickest one we've ever done, but I think you just summarized our views.
You and I haven't done this for a while, actually, right? We've had a few guests on. I feel like, when was the last time we did
I don't know. I've had a lot of cameras in front of me the last 2 weeks, so maybe not on this particular podcast, but it is good to be back. And before we get into that, obviously you live in Chicago. I live in Ohio. I'm an Ohio State fan. Ohio State plays Northwestern this weekend at Wrigley Field, and
I'm glad you didn't bring up the Purdue game.
Well, that's true.
from last week.
Yeah, that's true.
I saw the score. And I was like, I have a group chat with my buddies from college, and I saw the score. I was like, okay, I'm muting this chat for the next 2 months.
Yeah, Ohio State beat Sonu's Purdue by just a few. We'll leave it at that. But yeah, Sonu and I get to hang out this weekend, watch some football in the great city of Chicago. How's weather? Wrigley Field. Weather looking all right? It gets cold.
Fingers crossed, man. Okay. It's like 55 degrees thereabouts, but it's not bad for November.
Right,
at least it's not. Hopefully, it's not 30s and 40s. It could have been 30s, and then I'll be miserable.
We'll just stay in your apartment. Or your house. We'll stay at your house and watch it. Anyway, all right. So let's dive in. Let's talk about the election a little bit. We've obviously written about it extensively. CarsonGroup.com/election. Tons of content that we've been sharing all year can be found there. In the end, President Trump won 312 electoral votes to 226. That was the highest for any Republican since Bush in 1998. Highest since President Obama's second term, though. 226 was
Bush in 2004, was it? Or 98?
2008. 2088. 2088? What happened in 2088? 1988.
That's like a sci-fi novel.
Yeah, no, it was the highest since 1998 for electoral votes, but it was also the first time a Republican won the popular vote since 2004. Flip side of that, of course, is it was the lowest number of electoral votes for a Democrat since caucus in, again, 1988. I'll say that correctly. The popular vote, I believe, is up to 75,000 versus 72,000. I'm struggling. 75 million versus 72 million. Again, it is what it is. Pretty big surprise. I guess President-elect Trump won the popular vote. Not so much won the presidency, because some of the betting markets and some of the things you can follow were actually predicting, potential victory there. But how surprised were you that he took all 7 of the swing states? Maybe let's start there.
Look, it was a close, before this is pre-election, right? It was a close election, but the most likely outcome with respect to polling errors, and we wrote about this, right? The polling errors are always going to be correlated one way or the other. So if one candidate won, the odds were they would win all 7 of the swing states. We're talking about Pennsylvania, Wisconsin, Michigan, North Carolina, Georgia, Arizona.
There's one more. Right? What is it? Is it one more? Is that 6?
Nevada.
There you go. You're good. I've forgotten all 7 of those states even exist after this election. I don't even know what their names are at this point. But
we won't get to what are the original 13 states, but I have to think about that one. But maybe some, But no, look, the most likely outcome was going to be somebody sweeping all 7, and that's what happened. I think what was a surprise, to be honest, was that, like you said, Trump winning the popular vote by about it's. By the way, has California stopped? Finished.
I was going to ask you, how in the world is California, Arizona? I don't get it. I don't know.
No offense to anyone in California, any listeners of ours. Fans of ours in California.
Maybe a little offense. Yeah, how in the world are you not done counting?
Come on. I mean, this is But anyway, Florida finishes. I mean, Florida had issues about 24 years ago, the 2000 election. But since then, they've gotten their act together.
Oh yeah,
and they. I mean, it's not like it's a small state or anything. It's a large state, large population. They were done that evening by 9:00 or something. California, okay, one more day. I don't know. But anyway, once all said and done, I think the popular vote margin will be about 1.5%. But then again, continuing on that, what is also surprising, if you told me, Trump's going to win the popular vote by 1.5 points, what happens in the Senate and House? I would say Democrats get wiped out, right? And Democrats had a hard map. We talked about that with the Senate. Right, but they won, I think, 3 out of the 4 swing states down ballot. So it was interesting. A lot of people picked Trump on top and picked Democratic senators down below. So in Arizona, Wisconsin, Michigan, Pennsylvania was close. So that's kind of wait, that's a little weird. But maybe it gets back to the thing we always talk about. People want checks and balances in some form or the other. And then the House was tight, right? The House is going to end up 221, 214, something like that, which is pretty much the same majority that Republicans had. And so that's a 4-vote majority. So I think it's still fairly tight. I remember back in, 2016 when Trump won, Republicans had a 25 seat majority at that time in the House. And so all this matters, right, with respect to, because Congress is the one who has to write tax bills, etc. So there could be some sort of, these 4 votes, whoever they are, they're going to be I want this, I want that. You have to cater to that.
Yeah, we saw that the last 4 years. It felt like with some of the really tough other tight votes that were there. I mean, a couple other things about this. I mean, the stock market is what it is. The day after, so Wednesday, up 2.5% approximately in the S&P 500. The best first day rally after. I was going to ask,
was that the best
ever?
First day?
Yeah, it was. Yeah. Now the previous one was 2% 4 years before under President Biden. So we've had 2 really good ones. The market is up, I think, 4 or 5 days in a row. The time that we're recording this podcast on, what is today? Today's Wednesday morning or Tuesday. Yeah. Tuesday morning.
Tuesday 12th, November 12th, Tuesday.
Who knows?
Will be out tomorrow morning.
Yeah. But I think I want to talk a little bit more about just the kind of the surprise and just, I'll put it this way. I think this was the first podcast election. Here's what I mean by that. I think so many people got to listen to candidates different ways. I mean, it is what it is. We follow traditional media, yes, but a lot of people follow a lot of other media. We do this podcast, right? I mean, a lot of people do podcasts. Exactly. President Trump was all over some of the. Every time I turn around, I feel like he or JD Vance are on one of these big podcasts. Obviously, Democrats did not quite go all in on the podcast as much. And you look at kind of how things shook out. I don't know if it's because they're on podcasts or not, but they hit, a lot of people doing that. I put it like this: in 4 years, I think whoever the candidates are going to be doing a lot more podcasts. And I made a joke. I mean, who knows? Who's to say both candidates don't go on Joe Rogan? I mean, seriously, and have a debate there before the election with Joe Rogan for 3 hours. I mean, that could be where we're going with some of the stuff. So just really fascinating. But I think it just shows, again, how people are consuming their news, right? It's the Wayne Gretzky quote: skate where the puck's going to be, not where the puck is. Traditional media, it's out there and they do a lot of good stuff, but there's a lot of other ways we consume now. And I think that was one of the reasons that Trump did so well, is they hit some markets that they maybe didn't expect to. And the joke was his son Barron, who by the way, he's really tall now. Boy, he grew up, didn't he? Like 6'9" or something. I don't know. He's really tall. I mean, President-elect Trump was saying, his son told him to go on this podcast. He didn't know who these podcasts were, and he did it. But he hit some certain markets that obviously it seemed to work out. So Barron was apparently the something that no one saw coming, I guess. There. Yeah. What else you want to say about the election here, Sonu?
I think on that, it just goes to media so siloed, and where people consume their news, get the information from, it's so siloed. You go on, obviously, Fox and CNBC and
all of them,
Bloomberg and all the time, but people get a lot of news from TikTok and the podcasts and all of it, right? So I think going forward, it's not, you can't just isolate yourself to the traditional mainstream media. You have to go pretty much everywhere, right? You have to go everywhere else, spread yourself around, and and maybe come on Facts versus Feelings too. Maybe we can get somebody here.
Whoever runs. Yeah, well, I mean, believe me, anyone in the White House is available, allowed to come on.
Happily,
President Biden, Harris, Trump, anybody can come on this podcast.
Yes, totally.
And anyone who runs in 4 years is allowed to come on our podcast also.
The other thing was, actually, you shared a chart last night with us. This was from the Financial Times. A very interesting chart. So, in some sense, this was a COVID election. Right? People are unhappy about the economy and inflation. And you and I have talked about people being unhappy about the economy, right?
Yeah.
President Biden's approval rating was in the early 40s, maybe even late 30s for a good chunk of his term. Maybe 41, 42% right now. And that's not an environment when incumbents do well.
Yeah.
Right? And now what's ironic is, I think the U.S. has had 2 COVID elections. One was 2020. People weren't happy. And they're like, okay, we need somebody new. 2024 came, people are still unhappy. We need somebody new. And it's happened across the world.
Yes.
Right? It's just that the U.S. had 2 elections coinciding with that post-pandemic era, whereas everyone else had 1 election. And whether it's India, Brazil, UK, whether it's conservative or liberals, left or right, incumbents just got thrown out across the board. In fact, in the U.S., maybe Harris did relatively better.
Yeah.
Right? So in that sense, it wasn't, I suppose we shouldn't have been surprised that we got surprised with Trump winning the popular vote.
So, the chart from Financial Times was awesome. They looked at all the developed nations this year that had an election. And what they found was, this for the first time in history, we're back to 1950, first time in history, every single developed nation, when you look at the how much people voted, the voting share for the party in power went down. So they might have won. Some of them they actually might have won, but they didn't get as many votes as they did 2 years ago, 4 years ago, last year, however they do their voting in whatever country we're talking about. But that was, again, and Vice President Harris actually did much better relative to a lot of other places around the world. So this wasn't just a U.S. thing to kind of change leadership and being a little upset and disappointed with what was happening. It was happening all around the globe. And again, maybe it shouldn't have been such a surprise what happened. I think it's also fascinating, Sonu, for the first time ever this happened. We live in this world where we consume so much data. We just talked about podcasts and videos and so much data. We get real happy quickly. We get depressed quickly. All these things happen really fast. And maybe it shouldn't be a surprise now that every 2 years or so, when we vote, at least in the U.S., we're going to see these bigger swings because people, it just is what it is. And it's the
and
trend
all
we're
it
going.
takes is like a few people in the middle, right? You have like maybe 46, if you have a group of 100 people, 46 people on either side who are like, will vote for their side no matter what. Then you have 8 people right? Switching, even if one changes and suddenly everything shifts, right? Instead of 4-4, it becomes out of the 8, you're like 5-3 or 6-2 or something like that, right? The other thing I was thinking about, I mean, getting back to something you and I always talk about, like inflation. I mean, we are focused on the inflation rate, saying, oh, it's back to 2%. We said inflation is no longer a problem anymore, but people are unhappy about the fact that prices are still high, right? Prices have been much higher than 5 years ago. And I totally sympathize with that. I get that, right? I mean, so I think that's been in the whole box of why the economy sucks, right? Because prices are higher. Prices are like how much ever higher. I was at a client event a couple of weeks ago, and I was explaining how we think about inflation. We as in, the people who look at the data, versus how, the folks around common people think about inflation. Yeah. And I was like, say you have ice cream, like the price of ice cream before the pandemic was $2, and that goes up to $4. That's 100% inflation. And then from $4, it goes to, $6. That's 50% inflation. Yes, inflation's coming down. And then from 6, it goes to 8. Inflation's come down to 33%. Then from 8 to 10, it's come down to 25%. So inflation from, an economist perspective, market perspective, Fed perspective, inflation's come down from 100% to 25%. But the price of my ice cream has gone from $2 to $10. Right?
Yeah, so I heard like the McChicken over at McDonald's. I'm not a fan of the McChicken. I'm a quarter pounder guy myself, but nonetheless, it was like $1.90 right before COVID for one McChicken. Now it's like $3.50. That's different areas, different prices, but that's ballpark. But that's a good example of and you know what you used to pay for something to drive through, whatever, and then you go through and it's almost doubled. Now, in a lot of cases, and we pointed this out, wages, income, compensation have outpaced inflation in a lot of cases. But at the same time,
including for the lower end,
they've done even better, right? In percentage basis, they've even done better. But hey, that's still obviously a big reason we think things ended up the way they just did. So you want to talk a little bit about policy? And we talked about it before, so we haven't changed. But I guess now that President Trump won, the big question is: are tax cuts coming? Are tariffs coming? I mean, those are the two, right? Taxes and tariffs, I guess.
Taxes and tariffs, TNT.
TNT. What do you think? I mean, where do we stand on that?
There's some acronym like TNT. Right?
Oh, yeah. That's the AC/DC song. I'm an AC/DC fan. There you go.
Same. There you go.
Yeah. So what do you think?
King, always.
Oh, yeah. Yeah, real fast. So in, September of 2016, I was in New York City. AC/DC was playing at Madison Square Garden. I'd never been to Madison Square Garden, but it was with Axl Rose because the lead singer, Brian Johnson has some throat issues as well. That sounds pretty cool. So I go just solo by myself because I'm in New York, whatever, go to New York. And of course I run into Michael Batnick, Joe Fahmy, Josh Brown, a couple other guys. Like I just run into them and I just sat with them. It just so happened there was a seat. It wasn't their seat, but there was a seat open by them. I just sat there. So I'll leave when I have to leave. Watch the whole show with them. That's like a typical New York story. But seeing Axl Rose sing a lot of AC/DC songs was really, really cool back in September.
I've never seen them, but I would love to.
It was pretty good. What in the world are we talking about, Sonu? Let's start with taxes. There we go. Let's start with taxes. Taxes. Small caps soared. Russell 2 was up 6% the day after the election. Yields also went higher, but we've talked about internally with our Carson partners and our team. Small caps probably soared not so much because yields were higher, but because they're sniffing out lower taxes. You want to go from there?
In fact, two things. It's the opposite, right? Small caps soared despite higher yields. Yields went up. Whereas over the last 2 months, we've seen the other way, the other correlation happen. Yields go up, small caps go down. Yields go down, small caps go up, right? Mm-hmm. But this time, yields went up and small caps went up. Over the 4 days since the election, I'm just looking at my numbers. So we're talking Wednesday, Thursday, Friday, and then Monday. Small caps, the Russell 2000 is up 8%. 8%. The S&P 500 is not doing too shabbily itself, about 3.84%. Mid caps are up 5%, but small caps 7.8%, right? So I think, it gets to don't fight Congress. We always talk about don't fight the Fed, but don't fight Congress as well. The Tax Cut and Jobs Act of 2017, which President Trump signed into law in December of 2017, it had two pieces to it. One was the corporate tax side. The corporate tax rate was reduced from 35% to 21%. So that was a big deal. Markets, in fact, once it became almost certain that that tax cut was happening, November was when we got some certainty around it. By the way, it took until November with huge Republican majorities to figure out what was going to be in that tax bill, right? So in terms of thinking about, what could happen with even a smaller majority or what may not happen. So from November to January, markets rallied a lot, right? It's a good seasonal period, like you and I, talked about at the top of this podcast. But yeah, markets rallied a lot. I think 10%, 15%, something like that. Small caps are also up a lot during that period. So could we see the same thing again? President Trump has said he wants the corporate tax rate to go down to 15%. So, I don't know if that will happen, but I think markets are sort of putting some probability, some non-zero probability on that, right? Now, the good news is the corporate tax rates tax cut was permanent, but everything that happened on the individual side, right? The individual tax cuts in that Tax Cut and Jobs Act of 2017, that's all temporary stuff. That sunsets or expires or matures, however you want to think about it, at the end of 2025. December 31st, 2025, everyone's taxes goes up, or I should say January 1st, 2026, right? Okay. So in a sense, it's like a fiscal cliff. And I think the fact that we got a red wave, usually we think split Congress is good, and this is where I was a little contrarian, at least for the near term. I don't think it's a bad thing that we got that red wave because it takes the odds of that fiscal cliff happening off the table, almost completely off the table, because I think they renew it. Yeah. But what's the price tag of that? What Congress has to figure out over the next 3 months, once all the euphoria is done, once the chase is done, right? Post-inauguration, once again to February, Congress has to come up with one number. How much do we want the deficit to go up? If they renew all the tax cuts, right? Renew it for, 7-10 years or something. That's a $4 trillion bill, right? Now, I'm not saying they won't do it. I think the House is a little more reluctant to do it, but they have only a 4-vote majority. So the path of least resistance will be more deficits. Just give the store to everyone because you need the votes, right? The Senate is more, I think, in favor of let's promote business investment, deregulation, all that. Tax cuts is part of that story. We'll worry about deficits later. So I think deficits go up. You and I have been talking about that even before the election. We've written about that. It's just a matter of by how much. I think it'll go up at least by $2 trillion because they'll renew most of it. They want to add some stuff on, like the corporate tax rate maybe. So there's a lot of optimism there. Look, deficit spending increases profits, at least in the near term. Could it increase, interest rates? Maybe. But we have, and this gets to the tariff piece. Everyone's like, oh, tariffs are coming, inflation's going to go up. I'm not so sure about that because we have several disinflationary trends in the pipeline. We won't get into shelter disinflation, but there's more shelter disinflation coming. And look, when oil prices are below $70 a barrel, right? I'm not too worried about inflation, to be honest, right? No. And President Trump's with deregulation, all of that, what are we going to see? We're going to see more drilling, which means there's more oil, there's more supply, right? So there's, I'm not saying the odds of oil spiking to 90 or 100 or something is completely off the table. Who knows what could happen in the Middle East? But I think the odds of that are low. So all this to say, we could see tariffs, but I'm not too worried about inflation, at least not in 2025.
Well said there. A lot to unpack. What was I going to say? Oh, I just looked. Over the last 12 months, the Russell 2000 is up 44%. Wow. The last 12 months, the S&P 500's up.
So this is November through... November. Say November 10th to November 10th, something like that.
Yeah, right? Just went on Yahoo Finance, typed it in, and did last 1 year. S&P 500 up 35%. So again, putting some context around just how well small caps have done. People hated them for so long, yet they've actually done really well. You mentioned, could we have a end of year chase into small caps? Clearly, it's starting. Don't forget last year, the last 2 months last year, Russell 2000 gained like 21 or 22% the last 2 months last year on optimism over coming rate cuts. And then we had some of the inflation spike up a little bit early in the year, and that pushed the cuts back until obviously September. But now the Fed indeed is cutting, and that's a potential positive.
We have several things going for it, right? Like there's momentum coming into this, right? Every other chart you've shown me and shown the world really is that, hey, when things have been good, it's likely to continue. Yeah. Whether you look at the next 3 months, 6 months, 12 months, right? Yep. And goodness, we've had so much momentum coming into
And I'll just chime in. Just let me chime in for a second. So 2 years ago, right now, we Carson Investment Research went on record saying the lows were in. People thought we were crazy because we saw many buying thrusts and different things that took place. You tend to get bear markets bottom in October. You tend to get bear markets bottom midterms of midterm years of October. We saw these different things take place. You saw a macro backdrop that was solid, going to be way better than people expected. And we were on record. And again, here we are 2 years later being overweight equities for this pretty much this whole time. And we're still there. One quick thing on that, so I'll let you jump in. When the S&P 500 is up 17.5% for the year going into the last 2 months of the year, the historically strong November and December, things get even better. November's been higher 12 out of 14 times. December's been higher 11 out of 14 times. Those 2 months combined have been higher 14 out of 14 times, up about 6% on average when you're up at least 17.5% going into the last 2 months. Now, ballpark, we're up like 6% probably in November, so we're already there. But the reality, these are things we were talking about. This is why we added some equity risk. We manage real money in the models we run for our Carson partners. We added equity risk the Friday before the election. And believe me, we were kicking around, should we not? We wanted to.
That had nothing to do with we were expecting Trump or Harris.
No,
nothing to do
we just thought the negativity, all that VIX spike, all those puts that were coming in would unwind once the uncertainty election was alleviated. And the election is what it is. We knew by a couple hours in, it felt like in the evening on Tuesday what was going to happen. Futures knew that and different things, and we got the huge unwind, and here we are. 51 new all-time highs on the S&P 500 as of the time we are recording this, which is obviously
what's the record
a lot
on that?
Oh, boy.
Is it like 60, 70 or something?
No, it's in the 70s. 1995 is in the 70s.
Oh, it's
75.
70s, okay.
Don't quote me there exactly, but it is in the 70s. 95 was just a historically low volatile, straight from the bottom left to the upper right of your screen.
Wow.
But believe me, we're in the top 10. We're in the top 10 for all-time highs right now.
Wow.
And I like to point this out. One more thing, I'll point this out. In 2002, we hit one all-time high 2022. We went almost 2 years. We were nearly 2 years, I'm trying to say, without hitting an all-time high. All right. For nearly 2 years, I hit an all-time high. Like the entire calendar year of 22 and the entire calendar year of 23, we didn't really hit any all-time highs. We just started hitting them now, So just, again, more context around what's happening here, just to remind people that, we had some pain, I guess we'll say, back in 22 for a long time before we hit all-time highs.
Pain and perceived pain. People are
Yes.
just pessimistic, right? And that
Good
gets
point.
look, we've got momentum, we got seasonality, the VIX is coming down, volatility is coming down. That by itself puts upward pressure on the markets. And then, I think we get more animal spirits next year. I mean, with deregulation, all of that. I mean, one thing is a lot of people say like, oh, these returns that we're seeing even post-election are pull forward, right? Yeah. I've never bought that argument that there are pull forward returns. I mean, we've seen that with momentum. People discount momentum, which is probably why momentum works. And there's 150 years of research going into the fact saying, like, basically talking about why momentum works. And that's part of the story, right? So I'm curious how you think about that. Are these pull forward returns or could we see it continue? I think I know the answer.
Well, yeah, boy, there's a little bit of both. No, I think we're going to see continued strength. I mean, you could argue there are times you kind of pull forward some things initially. I mean, just the strength we saw to small caps this time a year ago, right, up almost 20%, boom, real quickly. And then if you look the first 6 months of the year, small caps are like flat, exactly flat. 6 months in, S&P was up double digits. I forget exactly where. People were just dogging and ragging on small caps, how bad they were. And I remember saying on this very podcast, what if they were just consolidating for 6 months, a historic run? And that's what I think they did, right? So they sniffed out rate cuts. They sniffed out a better economy. I'm not saying they sniffed out anything with the election, but there were some positives. Now, you did ask me a question. I want to make sure I say this correctly. No new highs in 23 for the S&P 500. One new high the entire year of 22, and that was the first trading day. So for literally 2 years, we made no new highs. Now up to 51. Now, we hit 70 all-time highs in the S&P in 21, which was the second most ever, and 77 in 1995 was the most, or is the most all-time highs for 1 year ever. So again, just is important to remember, for 2 years we hit one all-time high, 2 calendar years. I mean, that's pretty important to put some context around. Yeah, it's been a heck of a run. Don't get me wrong. We're enjoying it. Believe me, being overweight equities for 2 years, we're enjoying it. But there are some reasons. One more thing, Sonu, back to you then. Small caps, like if you look at the Russell 2, I don't believe it's an all-time.
I was going to ask you literally a pop quiz, but Ryan, are small caps at an all-time high?
No,
or no?
well,
okay,
the
no,
S&P 600. The S&P 600 is that's small caps, but the Russell 2000, another variation of small caps, is not. Reality is that transports are just like hitting all-time highs. So we said this again on this very podcast for a while. I know I said something like, do you really think the bull market will end before most stocks aren't even hitting all-time high? Meaning most stocks, small caps, mid caps, which weren't for a while. Now they're starting to. And now they're finally starting to hit all-time highs after a long time without hitting all. I might have to look into this, like, when the S&P, or I'm sorry, when the Russell 2 goes a long time without a new high, what happens after? But we finally are making it again on the 600, which kind of looks at the companies making have a little bit better earnings. The Russell 2 is kind of famous or infamous for 40% of the companies in there don't have any profits. So anyway, it is what it is. But the reality again is there's a lot of stocks still have not even hit all-time highs yet, Sonu. So let's just remember that when we say this market's gone too far, too fast, I guess I'll say.
By the way, on the topic of the Russell 2000, year to date, I just looked at it through yesterday. So this is through November 11th.
Yep.
The Russell 2000 is up almost 22%.
Yeah, how about that?
Tech stocks, and remember, like the story has been like Nvidia and Meta and Google and Tesla, all of that. The technology sector is up 23%. So small caps have almost caught up to tech. The S&P 500 is up 27. So there's still a gap there. Hey, 22% year to date is not bad, right?
No, I think we'll take it. I think, and honestly, there's who's to say small caps can't catch the S&P? We're not saying it's going to happen, but if you look at last year, this momentum can't continue. Wouldn't that just make the heads of the bears explode? Because for the longest time, the bears say, "Oh, small caps, mid caps." A couple other things here interesting about the election. As I'm looking at my notes, the last 10 elections. If you look at the last 10 elections, and just for fun, let's go through it all. 2020, Joe Biden. 2016, President Trump. Obama 2 times in 2012, 2008. Then Bush 2 times, 2004, 2000. And then 96 and 92, President Clinton. Then we had Bush 1 and Reagan. Okay, the Reagan second term. Those last 10 elections, if you just simply bought the S&P on that day and held for a year, S&P's higher, 9 of them. Okay, so 9 times out of the last 10 elections, S&P's higher a year later, up 15.2% average, median 17.2. Now something for everybody. You go back further, the returns aren't that great.
So this is from election day.
Election day, that's correct.
1 year later.
That's correct. Now you've got like the Great Depression in there in the 30s. Things weren't all that great.
Which was the one that did? Out of the last 10, you said 9 were positive. What was the one that was negative?
Let's see here. Negative 20. Let me get there. George Bush 1, 9/11. I mean,
Bush 2.
I'm sorry. Well, yeah, George W. Bush, his first term is what I meant to say, which was on November 7th, 2000. And anyway, but yeah, down 20%.
And by then, the dot-com crash was already.
Well, we were in the recession, dot-com crash. It was not a very good time. The best. Let's see if we can just take a look. Looks like the one we're in right now. Joe Biden. How about that? President Biden up 30. Oh, that makes sense because COVID and stuff. But up 38% 1 year after President Biden won.
Because I think the vaccine news, without getting into conspiracies and things
like that, came out. And then,
the vaccine news came out 2 days after the election.
Yeah,
and that boom. And then Democrats, there was a blue wave, technically, ironically, not on election day or just after. It was after the Democratic senators won in Georgia, I think. That's when the Senate went Democratic. The House is already Democratic. And then I remember yields jumped, equity stocks jumped. I think, that was a big, we got more stimulus, all of that. Yeah, that was a big. 2021 is a big year. I mean, what you said, 70 new highs?
70 new highs, obviously coming off of the COVID, the 34% bear market in 5 weeks. Feels like a long time ago, though. So anyway, so that's interesting. Sonu, we've got like, about 10 minutes maybe, give or take. What else? I think we've covered the election a lot. What else you want to talk about here?
Looks like you're saying, next year is going to be good.
Right.
Like in terms of the outlook, right? Without giving away what our outlook is, we're still writing that and all of that. But look, from an economic perspective, we're in a good place right now. And I think that continues. There's no reason to think, that's going to end. Not when, we're going to get tax cuts, we're going to get deregulation. Maybe tariffs, there could be some uncertainty, but we don't know that. Anyone who tells you that they know what tariffs are coming is like, they don't know. Nobody knows. So we'll wait till that actually happens. But what I do know is that the probability of tax cuts happening is much higher than the probability of, tariffs just destroying the entire, global economy, which I don't think is going to happen. But that's how I'm thinking about it from an economy perspective.
No, well said. I did a podcast yesterday with a friend, and of course it was with some other advisors, and advisors were asked the legit question, when we've had higher tariffs, it led to the Great Depression or exacerbated the Great Depression, and countries around the world don't have tariffs. It just is a higher tax on the consumer. And we get a lot of those things. And I just said, but we had higher taxes or higher tariffs. Before. And yes,
including the last 4 years.
Well, that's what I was getting at. I mean, we had high taxes under President Trump for a while, and then 2018, those tariffs came on in early February. And then market didn't do that. It had a heck of a run, right? From really, I guess, around Brexit in the middle of 16 until the peak early February of 2018. And then when tariffs came, the market took a break. But then the tariffs were there. And then the last 4 years under President Biden, when things have, 22 is terrible, don't get me wrong. But the last 2 years have been really good, as we just talked about. Those same tariffs are there. In fact, he's added a couple tariffs that President Trump had. So that's, and the fact we're talking about it. Everybody's a tariff expert now. Just like in early August, we all were yen carry trade experts. Remember the yen carry trade implosion where Sonu and I said, don't worry, it's not as bad as they're telling you? Yeah, that's
Silicon Valley Bank, the yen carry trade tariff. But tariffs, good point about there were more tariffs, even more tariffs, I should say, under President Biden. 2022 was bad. 2018 was also rough in a lot of ways, leading into Christmas Eve, I believe. But the other thing that was happening in these 2 years, the Fed was raising interest rates.
Good point. Yeah,
that's not on the cards for next year. In fact, the opposite. I mean, they may not reduce rates by 4. They may not cut 4 or 5 times, anything like that. They'll cut, I think, at least twice. That's something. That's not for nothing. And so the dovish bias is on. And, that's another tailwind.
Yeah, well said there. I do want to point out, if you want to hear the latest from us, don't forget to subscribe to our podcast. You can leave a review. We love your feedback, so please do that. The algorithms and everything, they really they like those types of things, so help us out with that. What else do we want to say, Sonu?
I have one question. You know what? While we're on this, we're talking about markets, what's your thinking about gold? Gold's gone down since the election.
Yeah.
Bitcoin's gone up a lot, and, I don't know. I don't even know if you're allowed to talk about Bitcoin. So set that aside. Right? I mean, but, we talk about small caps and, small growth stocks, mid growth stocks. Have outperformed a lot since election. I always think about crypto somewhere in there as well, speculative, risky assets. Gold is a little different, right? What are you thinking about gold? We, full disclosure, we own gold in a lot of our model portfolios, especially our tactical models. We've owned it since the SVB crisis back in March of 2023. That's why, and we haven't, taken that down really. We still like gold, but I wanted to get your perspective on that.
Yeah, I mean, gold's had a heck of a run, and like you said, it has been hit very hard as more pure traditional risk-on assets have obviously gained a bid since the election. I still think gold's in an uptrend. I still like gold. I think it's oversold in an uptrend, so we'll see here. It should react positively relatively soon. I do think, you talk about elections, and everyone seems like, well, if this happens, or if he wins, this will happen. If she wins, this will happen. It's never quite that simple. Barry Gilbert on our team put together a great blog last week. He took a look at the first time President Trump won in 2016. The groups that did really well the first month, things like value, small caps, financials. That sound familiar? Sounds a little bit like what we've seen lately. But then Barry looked at the whole year, okay? The first month, one thing, but then the whole year of the election. And those things that led off the first month or so, they did okay, but they were not the true leaders. It was like technology. It was like growth. The things that didn't do as well. Now, this is a sample size of 1. But I just want to be clear that, I wouldn't be shocked. Gold sold off maybe the first month under President Trump. Then when we look back, and gold did still pretty well. I think that could be the case. Also, it does feel a little top-heavy to me, all the talk about, the strong dollar, tariffs, the strong dollar. Dollar's at some long-term trend lines. It's overbought here. I think the dollar could be another thing that we look back in, let's say, 2 years, where everyone's talking about a stronger dollar. And I'm not saying it's going to collapse. I mean, but I'm just saying it might have trouble continuing to soar. And historically, the gold does a little bit better when the dollar is a little bit weaker. If the dollar soaring, that's not usually a good backdrop normally for gold historically. So anyway, those are some comments there. And also with yields, I mean, I get the same feeling, about yields and the stronger economy. And I wouldn't be shocked at all. Like you've talked about with strong productivity, and the door is still open for multiple cuts, and maybe yields kind of continue to kind of surprise and go down, because I know they went up a lot initially. But the thing that shocked me, honestly, goodness, do this for a living. TLT, long-term treasuries, were up last week. If you'd have told me that, because all I'm thinking about is Wednesday when we saw a 13 basis point jump in the 10-year yield, because that's what I remember, because that was a big move. But bonds went up, okay? And just so everyone remembers, yields up, bonds down, yields down, bonds up. That's usually how it works. Right. So that could be another one to potentially fade, is yields will not just soar going forward, which we still like stocks more than bonds, let's be clear. But there's some opportunity in fixed income, a lot more than it was a couple of years ago, for sure. What do you think?
No, I think with you that I think gold is right now in this immediate post-election period underestimated. To use it, I'm not a technical analyst, but I'll use a term very colloquially. Like, I think gold is oversold. I think yields are oversold, or bonds are over. However you want to think about it. I think yields, same thing. Yields, and yields have gone up over the last month and a half, right? And I think that's partly because it's nothing to do with Trump or tariffs or deficits or anything like that. I think it's mostly, the economic data has been really solid. So the odds of a recession have gone down over the last 6 weeks. We've had solid economic numbers. That's really why yields have gone up. I think they've probably gone up a little too much, and hence why I'm saying they're like oversold. My bonds are oversold here. So gold is also, I think, oversold. Going to the dollar as well, I think it's maybe overbought. Is that a word for it?
Yeah, it's a word. Yeah. I don't know if Webster says it is, but I say it is. Yeah.
Yeah. So, and then looking into next year, I think that strong dollar, I would put it this way. I think about the strong dollar. I think the dollar may, tread water, maybe go down, but it's a risk. How I think about, could it go up? Yes. So, but the probability of that is lower, but I think it's a risk factor. Right? The strong dollar going up is a risk factor. Why? Because a lot of S&P 500 companies earn revenues outside the U.S. So the dollar going up, dollar appreciating, puts a headwind there for those companies. But the other side is it also puts a headwind into international equities, right? A lot of us buy international equities, or most people buy international equities in U.S. dollar terms. As the U.S. dollar appreciates, that's a headwind for international equities. That's one reason we are underweight international equities. We have been for a long time too.
Right.
In anticipation of this. But remember, 2017, the dollar actually went down a lot.
Yeah.
I think everyone forgets that. I mean, 2018, 2019 came up, and then obviously COVID happened and all of that. So, cut that off. But 2017, the dollar really, went down. And I think international stocks, I'll have to check the numbers. I think international stocks actually, outperformed U.S. stocks that year. So I'm not saying that's our base case for next year, but don't be prepared to be surprised. Don't be surprised if you're surprised. I'll put it that way.
There we go. A lot of surprises out there, but well, I think we're done. I think we've covered a lot. Again, this was episode 109 of Facts versus Feelings, and the title again was "The Post-Election Chase is On."
There we go.
So hopefully everyone enjoyed this. I guess. Yeah, you and I are doing this again next week, right? You're around?
Yeah.
You're traveling here sometime later this month, but so we'll be back, and who knows what we'll talk about. We'll find something to talk about, but hopefully everybody
maybe the chase continues.
Yeah, that's true. The chase. Yeah. It's probably like a movie, The Chase Part 2.
Yeah, like Rush Hour 1, Rush Hour 2.
I saw some clips of one of the Rush Hours recently on social media. I really, of all the buddy cop movies, that's gonna be my favorite one.
I like that one.
I mean, 48 Hours is pretty good because that kind of kicked off the buddy cop thing. But Rush Hour, yeah, that is hilarious.
That was funny.
Anyway, whatever. All right, everybody. We'll see you next week. Thank you to all the listeners. Please give us a review if you can to help us out. And the election's over, so we'll keep talking about some other stuff going forward, though. But the chase is on. We'll see everybody next week. Take care. Thank you.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM, LLC, or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.